President Trump securing a $550 billion trade deal with Japan. And folks, this is not just a handshake and a headline. This is a blue-collar economic windfall.
But I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. But we're doing really well as a country. We're strong. We have a lot of money flowing in.
Welcome to the Big Money Show. I'm Daga McDowell, joined by my co-host, Jonathan Hoenig, Brian Brimberg, Jackie DeAngelis, and with us for this entire hour, John Lonsky, Lonsky Group founder and economist extraordinaire. 15% tariffs, 90% of the profits flowing right back into the United States. Japan will open its economy to U.S.-made automobiles and agricultural products. President Trump says it will create hundreds of thousands of American jobs, not consulting jobs, not human resources directors, actual make stuff jobs, building automobiles, cars, growing food, exporting American energy. Leverage, pressure, and results. The president is already pivoting to the European Union, and Brussels is scrambling to avoid a 30% tariff. The president is flipping the script, and American workers are cashing in. John, how do you see this? Japan, critical trading partner, critical ally of the U.S., and this deal gets done, and the Treasury Secretary, Scott Bessent, does deserve a good chunk of the credit here.
I concur with the U.S. equity market. And the Japanese equity market, I think today was up by more than 3%. Some of the auto stocks in Japan posted even bigger gains. What really stands out to me, as far as the American worker is concerned, is that this inflow of capital, that $550 billion that Trump is speaking about, you know, that's telling me that perhaps Japanese automakers will increase their presence in the United States, build more cars, and that implies more manufacturing jobs for Americans. This is definitely a positive.
I'm familiar with the automaker, the Japanese automakers throughout the South, because they were in right-to-work states, right?
Yep.
You're going, yep, shaking your head. Continue.
Well, I think it's the auto part of this is interesting, and I'm kind of curious to see where it goes because, you know, Japan was really concerned about 25% hitting their autos, and those are not. They've got a lot of auto manufacturers in the South. They've got a lot of manufacturing outside of the U.S. as well, so that's an issue in terms of tariffs. But the interesting question now is, what does it mean for Canadian and Mexican automobiles that have U.S. content in them? And this is what I think this could be the roadmap for that, because it went from 25% to 15%. Isn't it funny that everyone's breathing a sigh of relief at 15%? This is total Trump, right? Because if you would have come into this thing months ago and said, I want a 15% tariff, I'm sure everybody would have melted down about that and said, that's terrible, it's got to be lower than that. But because he came in at these higher levels, very Trumpian, 15%, the market's like, oh, good, 15%. But so, Jonathan, let me just say, but I think Canada and Mexico now are saying, okay, how do we get in on the 15%? And the big three automakers want to see that happen, so we'll see if it's a template here.
Isn't that the issue, though? I mean, if the goal is to get people to manufacture in the U.S., at 15%, at 20%, it's still profitable to import those foreign goods. So it almost seems like, you know, you have to have the tariff be something like 30, 40, 50% if you actually want to bring that manufacturing home. A lot of importers will say, okay, 15, 10, 20% we can kick in. 50, 60 we cannot. So is this really going to actually achieve the president's goal to bring manufacturing
as I said earlier, I think the important point is there seems to be some implication of increased direct investment in the U.S. economy by Japanese companies. When I used to have a full head of hair like you, back in the early 80s, Ronald Reagan was president. He was under pressure to place tariffs on Japanese automakers because they were overtaking the U.S. auto market. But instead of what the Japanese automakers agreed to do, was to begin to establish these manufacturing plants in, Tennessee, wherever, Alabama, and they did that in place of having to have these tariffs placed upon them. Japanese auto stocks increased sharply today, and that's because Japanese investors, global investors, are convinced that these Japanese automakers, the Toyotas and the like, have the profit margins needed to absorb a lot of these tariffs without suffering unduly. And they got that uncertainty out of the way.
And just go ahead.
Go ahead. No, it's okay.
No, go ahead.
I was just going to say, if they manufacture here, to Jonathan's point, then they don't, or they manufacture components and things, and that's what this investment part of it is about, then they don't have to pay anything. So that's the incentive. I mean, 15% is still more than zero, which I think is positive. But I just wanted to talk about the access part, Dagan, because the investment here in the United States is important. It's going to create jobs. But President Trump and his team have been talking about access to foreign markets. This is what they want for China, for example, to open things up so that we can do more trade over there. We can sell more of our goods over there. And I think that piece of this is interesting, too, because as these deals come out, if they do serve, Brian, to your point, as a template, it sort of lays the foundation for the other countries that we're negotiating with right now. I go back to that New York Post cover. I'm not tired of winning yet, and the market likes this deal.
One of my questions would be, what type of motor vehicles do the Japanese want to import from the United States? Maybe pickup trucks, some specialized vehicle? I have some questions about that.
Well, it sounds like they get their choice now because there's not going to be a tariff.
And you can't underestimate the importance of Japan as a trading partner. They are our biggest foreign investor is Japan, and our number 5th biggest importer. So this is a very vice versa positive relationship for Americans. And the fact that, like it or not, the fact is these tariffs are higher than they were just 10, 15 years ago. Yes, I know they're down from 24% to 15% now, but they were 2% before Trump came to office.
Right.
So tariffs are still up quite a bit.
And tariffs are a sales tax. And when you tax more of something, you get less of it. And, quite frankly, but I think we're seeing right now as a first step of broadening the tax base for the U.S. government. Who knows? There might be a further broadening in the future as a means of trying to close that federal budget gap.
I think that sales tax thing, though, is overplayed a little bit in terms of where do the costs get passed on. I just think that was like the big boogeyman when this all started. You're all getting a big tax. Watch your prices go up. And I just don't think that's played out yet. Now, maybe it'll play out. But and Jonathan, just on your point about the tariffs and 10 to 15%, and Jackie, I think, is going here. 10 to 15%, I still think is a big encouragement for companies to look at relocating to the U.S. I mean, it's not nothing. I don't think the president wants to completely cut off the flow, and I think he likes revenue more than anything, and that's what the 10 to 15% will get you. But every company is on notice. If you want to make your life simpler now and in the future, because I think the American people are with the president, you should look at doing it in America. To me, that is the most crystal clear message the president has sent economically in this term so far.
And who's our biggest trade adversary? It's not Japan nowadays, it's China. Is this sending a message to China? And do we really want to have foreign direct investment from Chinese companies in the United States? I wonder. We have a military problem with them, national security problems.
Well, I mean, one thing is for sure is that the certainty is a positive. And I think to your point, John, that's one reason that you're seeing equity markets both at here and at home up today, because, markets and investors can start to plan even a little bit long term. With all respect to the president, he's talking, well, in 30 days we could have this, and 60 days we can have that. As investors, we're looking much more further out from that. So the fact that we have some certainty here, that to me says why the market.
The president also did a Truth Social post, and I don't have it in front of me, but he said something very interesting today. He said, in response to the Japan deal, I will trade tariff points for market access. I don't know if you saw that post. And I thought that was such an interesting post from a certainty standpoint, from a where he's going standpoint. That was one of the first times I've heard him say, I will give up on tariffs, which he loves, because he wants more than anything market access for U.S. goods. I do think investors like that kind of message because it is an access openness message.
And this all gets to what we were talking about yesterday about growth and the overall economic engine that he's trying to build here. I don't think you can't really put tangible values necessarily on how much they're going to take from us. But if every country he's negotiating with starts taking more goods, it starts to become, it's significant. We were even talking about tariff revenue. Nobody was expecting $100 billion so far or $300 billion by the end of the year. So these are aspects, and also goes back to the big, beautiful law, Dagan, because at the end of the day, we need that growth engine to pay for some of the stuff that was in there. And this is how the balancing act happens.
You mentioned the tax of the tariffs, and you might have covered this yesterday, but GM, General Motors, is eating the tariffs. That it reported $1.1 billion in off operating income because of the tariff. Wait, let me finish. That was a 32% quarterly drop, and they absorbed rather than raising prices this quarter.
That's right.
So their shareholders ate
on the prices, right?
Right.
The shareholders are getting hit.
I'm agreeing with you that it's not a free lunch, that the money shows up somewhere.
Yep.
And there's less money for investment spending on the part of GM.
One other thing I wanted to add in terms of how unique the Japanese deal is, and this is straight from the Treasury Secretary, that what kind of brought this deal together at the last minute. It was the elections were on Sunday. The LVP did slightly better than expected, although it doesn't have a majority, and then the Japanese government was ready to come up with a deal. That's directly from an interview that Scott Bessent did. And then the president brings the Japanese trade team into the Oval Office. But the trade team came up with a unique financing mechanism to provide equity, credit guarantees, and funding for major projects in the United States. That is all, and that is in addition to foreign direct investment. All of this is new capital. And he was kind of suggesting that if the European Union wants to get a deal done, you might want to step up with something similar.
Right.
I will just leave it at that.